Hello, fellow traders. 'Tis I, the Rumpled One. Friday, February the 8th, the year 2019. Let's talk trading weekly wrap up. Um, I have to thank the traders out there who like my talking about trading like a pro and the videos that I've been doing this week. I appreciate the positive feedback. But there's something I just want you guys to understand. Uh, I've been telling you some of the same things, but I just didn't have that trading like a pro headline. But I mean, if you go back and you look at my other videos, I'm basically repeating myself. So don't get caught up in titles and the wrappings. Because see, that's what advertisers do. They know how to do that. And the only reason why I did that was because a trader said, you know, why don't you do that? Talk about trading like a pro. You've been doing this for decades. So I thought, okay. But the thing is, or another thing is, if you look at what most of the other people are putting out there, it's charged with a bunch of squiggly lines and indicators, lower indicators. You don't need it. Because see, part of trading like a pro is letting go of the myths, the falsehoods, and all that other nonsense that's being taught and talked about out there. You see, you have to understand this. You could do all the research in the world with supercomputers, and you could decide to go long a certain pair at a certain time at a certain price. And some newbie could come along, crank up their trading computer, and at that very same time you're going long, they could say, you know what? Yeah, it looks like it's going to go up, so I'm going to go long. They've done zero research. They've done zero analysis. So why am I saying that? The point being, the reason that you entered the trade has no bearing on the outcome of the trade. The market's going to do what the market's going to do. Now, does that mean you can just trade willy-nilly? Well, in a way you can, because so long as now I don't know why this computer's running so slow. So long as you have your money and risk management in place, you can only get hurt by the amount you're willing to lose per trade. So yeah, you could go out there willy-nilly and trade. But of course, there's some things that give you, you know, better opportunity than others. But when you really think about it, it's all about picking direction and whether or not you guessed right. And whether or not you managed to trade properly. Because once again, if you're up 5 pips and you let that trade draw down and you're now negative, that's your fault. You could have moved your break even to break even +1. And then you'll say, yeah, but the last time I did that, it took me out. I made 1 pip and then it turned around and zoomed for 50 pips. Yeah. Okay. So what? Because the next time you try that, you don't move your stop to break even +1. It drops you and you lose 50 pips or more. You're looking at that drawdown. See, we don't have crystal balls. We just don't. So you've got to let go of those falsehoods. You have to realize what trading really is. It's picking direction. And then you put your money and risk management in place, and then you trade. You might have different signals, such as we got the weekly chart here. You know, if it hits that previous week's low, we're going to go short. Big red weekly candle. Look at that. You know, or we might trade the gaps, which filled this week. But I mean, there it is right there, 16 pips. That's not a hard trade. You see it? What? The month is red 3 months in a row. We got the week is red after 4 green weeks. The day, we got 4 red days. I mean, it's just red, 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 right? You take the trade, you made money. It's not difficult. I mean, all you have to do is just know what that previous week's low was, right? It's not that difficult. You know, once again, we're below the yearly open. We were up a couple, now we're below. Look at this. I mean, look at that break right there. You see that? I mean, we're below everything. Once again, first day of the month low right there. Couple hours ago, what's that? First day of the month, short. Once again, trading at the horizontal lines, trading in the direction that price is going at the time. Why do I like to use H1? Because the range is usually 10 or bigger. Gives me an opportunity to take pips. See, right there, open day 1, it fell through. Not difficult at all. Once again, the low, day 1, fell through. Day 1 of the month. And remember, yesterday I alerted you to the inside bar. Well, look what happened this morning. It went up in and it came back out of that inside bar. Once again, a horizontal line right there, 24.59. Not difficult at all. Previous day, low, 124.34. Right now, that trade was worth 15 pips. Broke out of that wick zone. Now, right here, we have a lowest open. We'll probably put in another monthly lowest open and he could possibly look for that reversal. See, it had a daily H1 high a few hours ago, all the way from high to a new daily low. What does that tell you? Okay, we know about the rat zone, right? There, once again, a nice trade. Okay, here was the pivot. It was just slightly 2 pips above the buy zone, so really not much of a strong bias. See the weekly open there? We're below the weekly open. Maybe you want to go short. There were some short opportunities here. It did take out the pivot just a few hours ago. It was a nice move up across the daily open. But once again, if you took that trade right here, 63, there was your exit. So maybe you made 5 pips or a couple pips. But once again, if you were up 5 pips and you let the trade go against you, it's not my fault. It's your fault. You weren't paying attention, right? Or you didn't take action. You're afraid that you might have missed out on a big run. You got to get over that FOMO. That's why you have a plan. You have an exit playbook. And there you go, right there. Only have 51 range, but look what happened. It put in a high and went 50 pips to a new low. Nice holo trade there. Okay, we took out the pivot. And took out the weekly pivot. And where was that monthly pivot? Wasn't that monthly pivot? Yeah, way down here. Looks like it wants to head towards it. Still have a missed pivot from a couple days ago, that 51. So we're 127 pips away from that one, but we're only 93 away from this one now. So which pivot will get taken out? Which pivot will get filled next? Okay, price action. There you go. You had a 2-ball. Short at 60. Now we got a 3-ball with the long trigger being 30. Wick zone, in and out. In and out. Every day, same thing. You know, I like to trade off of this screen right here. There we go. Pips to the good. And on the tick chart, we had some nice motion to the downside here, about 9 pips. And the Einstein line, once again, price has to range. When you turn on the computer, price is going to move from wherever it is. It just is, unless, you know, maybe you only got 1 minute left in the trading day and it's a Friday. Yeah, price isn't going to move much then, right? But you can see here, that was good for about 7 pips. This stuff really isn't that hard. You know, all these people talk about price action, but price action is really so simple. If you look at it, doesn't matter the time frame. Price is either going to stay within the high and the low of the previous candle, or it's going to make a new high, make a new low, or both. And the chances are it's going to reverse off of that high and low. There's nothing more to it. But, you know, people talk about, oh, well, you got this a sideways market, you got, you know, a trending market, a consolidating market. It's all just talk. It's all just words. Price goes up, price goes down, price goes down, price goes up. That's it. Your mission as a trader is just to pick the direction. So I open the computer here. Price hit this Einstein line. I go short. Price is going down relative to when I started looking at it. You got the monthly down, the weekly down, the daily down, the H4 down, the H1 down. I mean, what more do you need to know? If price had gone this way, well, then I would buy. It's all relative to when I started. Now, yesterday, I said it's not how you trade it. I was running out of time, and so it got cut off. But you guys know it's not what you trade, it's how you trade it. At least if you've been watching my videos for a while, you know. It doesn't matter if you're trading stocks, you're trading Forex, or whatever. It's not what you trade, it's how you trade it. I hope you had a really good week of draining the banks, and I hope to see you again.